What home price should you really be looking at based on your income? Well, I'll take you through some simple math steps that you can apply to your actual income. So if you make $70,000 a year, what home price would you really be looking at? And please do not trust those payments online. Next to the beautiful house are payments that have nothing to do with that particular house for the common buyer. I see it too many times. People start shopping, they fall in love, and then they find out that they can't qualify or that the payment's really way higher than they expected. So let's walk through the real math. Lenders are going to look at your gross income, not your take-home pay. $70,000 a year is about $5,833 per month. So a common guideline that I see underwriters approve is about 38% of your gross monthly income can go towards your house note. That's about $2,217 per month for your full house payment. Principal, interest, taxes, insurance, and mortgage insurance. There are many different loan types. But for today, I'm going to use a common example of an FHA loan with a 3.5% down payment. So looking at more realistic monthly numbers for insurance and taxes, we're going to look at $210 for your property taxes and about $300 for your homeowner's insurance. That's about a $510 payment before principal and interest and mortgage insurance. So using 5.5% interest rate, factoring in the mortgage insurance for FHA, a realistic starting point for your house is about $280,000. Rule of thumb to keep in mind that for every $5,000 you borrow, your payment changes around $30 per month. So it's a small price difference, which may not change the payment much for you, but your lender still has to actually confirm if you qualify for that difference. Now, what the calculators don't tell you is that just because you qualify for a payment, it doesn't mean that you'll feel comfortable for it. So you really have to look at your spending habits, your coffees, your DoorDashes, your eating out subscriptions. The little things add up. So you need to ask yourself, what am I willing to change? And what am I not willing to change to buy a home? Homeownership is about choices. Your goal in buying a house affects everything around you. So you need to also look at how much money would you really need to buy a $280,000 house with an FHA loan. Now your down payment is 3.5%, so about $9,800. Your closing costs, prepaid items would be about $11,000. So FHA requires that you pay the house down payment. That can come in the form of gift funds, but you can't have your seller pay your down payment. But it can possibly be negotiated that the seller pays for some of your closing costs, prepaids, and don't forget about your buyer agent broker fee. Don't forget, there are other costs involved in buying a home. You have inspection costs, moving costs, utility deposits, setting up your home. I never recommend spending your last dollar to buy a house. That's why I encourage house savings accounts for maintenance, deductibles, future costs, peace of mind. Homeownership isn't just about getting in. It's about staying in and being comfortable and at peace owning a home. So if you're making $70,000, $280,000 may be a realistic starting point for this example. But don't start shopping blind. I've seen it too many times where you fall in love, then you find out you don't qualify, the payment's much higher than you expected. If you want a real plan based on your numbers, based on your real life, then reach out, comment plan. I'd be honored to walk through it with you so that you can be not only a successful home buyer, but a successful homeowner. And you can have peace and joy in the process.